You were listening to chartingwealth.com for Tuesday, the 3rd of April, 2018. We see stocks down hard for the day. We see that TLT 20-year bond down just a little bit, gold up nicely. Let's jump into the S&P 500 as depicted by SPY, the exchange traded fund. We see that we are going into our third week of down movement. Derivative oscillator, however, is losing downward momentum, but the price percent oscillator, our king of oscillators, king of indicators, is still heading down quite strongly, and the week has started off with a fairly sizable red down candle. Now, again, remember, we are looking at Heikin Ashi candlesticks. We have a training that about 67,000, getting close to 70,000 people have tuned into and watched at YouTube. Encourage you to check that out under Charting Wealth. Heikin Ashi candlesticks, Heikien-Ashi. Heikin Ashi means average pace. It's an amazing type of candlestick. We use it all the time here, and we do see that the week is starting out decidedly down. As we look at the two-day chart, what do we see? Well, we see things again over the course of the first day of the latest two-day candle. We see derivative oscillator gaining downward momentum, price percent oscillator kinking over, going down even further. Price movement well below the two-day and the weekly trend lines. And we'll just continue to watch and see how low will it go. We look at the 4-hour chart. What do we see going on there? Strong movement down in the morning, even stronger in the afternoon. And of course, we had things peak up in the afternoon on Thursday, the last trading day of the week. And what do we see happen? Well, we had a great jumping in point in the morning, actually at the end of the morning at noon. Hope that you jumped into that and are now following things down. We'll see just what the market does and how it settles out, but things are already looking quite nice from that jumping in point and down movement on our Heikin Ashi candlesticks. Again, that's what it is all about, is making sure you find those jumping in points. And thankfully, we had one on the S&P. Remember, we have both our weekly and our two-day chart going down, and now we had that back up on the 4-hour and a jumping in point. Now let's take a look at the Qs. QQQ, we're going to our third week of down movement. Derivative oscillators heating up on the Qs going down. Price percent oscillator heading down quite markedly. We look at the two-day chart. We see that it continues to parallel down quite nicely. Price movement below both the two-day and the weekly. Derivative oscillator gaining downward momentum. Price percent oscillator heading down strongly. And on that 4-hour chart, what do we see? Well, the 4-hour chart crossed over going down all the way back on the 15th of March and continues to trundle down. Never had that pullback. We did see a pullback occur in the derivative oscillator, but of course that is not our price percent oscillator. Some of you looking for possible jumping in points. Of course, you were looking on the 2-hour, and of course it can be fraught with peril because again it is a short chart. You can try, again, all the time we encourage you to try different time frames, try different approaches, but again the trick is trying the approach and keeping the one that works. That's why we practice trade constantly. That is what we are all about. So that's where we are on stocks. Let's go back to our weekly chart. We'll take a look at what's going on TLT. Now remember, we had a vertical crossover going up on TLT. We look at that weekly chart. We see it starting off with an up candle. Again, that's our average pace. It's not your traditional candlestick of open, high, low, close, but we do see up movement. Now, we'll talk about for the day, things were down actually 0.02%. But we see our Heikin Ashi candlestick, our derivative oscillator, and our price percent oscillator spiking up on that weekly chart, both the two-day and the weekly, in confirmed up moves. We see on the two-day chart, we see things sort of flattening out there the first day of the latest two-day move. Again, price movement is above the two-day trend line. We don't have a weekly trend line yet. because we really haven't had enough movement since that weekly vertical crossover to start drawing a weekly trend line. But price movement is above the 2-day trend line. Derivative oscillator, price percent oscillator headed up. What do we see on the 4-hour chart? Well, we see a bit of a down movement in the morning, up movement in the afternoon, but again, peaking out at about where things topped out back on the last trading day on Thursday. So again, we'll continue to sort of watch what's happening. We see the 4-hour chart sort of flattening. Derivative oscillator still positive, price percent oscillator positive. So we'll continue to keep our eye on things after that weekly vertical crossover. Remember, those occur when you have sustained long-term movement and change in trends, as we can see on that 4-hour chart. And we would expect, on the weekly chart over those last 4 weeks, or going on 4 weeks. And remember, when we look at our Heikin and Ashi candlesticks, they are calculated differently, but this is the biggest wave on that weekly chart. We'll continue to keep an eye on things. Lastly, we have gold. Gold confirmed down move all the way back on the 16th of March. And we never had a jumping in point for that down move. What we immediately saw is gold start ticking up for the day 1.17%. 2-day charts in a confirmed up move. We tried to have the weekly cross back over on the week ending the 23rd. And again, it looked like it was going to, and then it peeled off on us. And what do we see going on now? Well, gold's trying, it looks like again, to cross over, going up on the weekly. We may know something by Friday, because remember, weekly candle's not drawn until Friday. We do see the derivative oscillator losing downward momentum, price percent oscillator headed up. As we look at the 2-day chart, we can see that it's bounced off the red signal line heading up, price movement above the 2-day trend line. And we see the derivative oscillator gained a little bit of energy. As we look at that 4-hour chart, what do we see? It looks like it's trying to cross over, going up. Has not done that yet. Again, because there's a lot of down pull on the price percent oscillator and the derivative oscillator from 3 4-hour candles heading down through the morning on Thursday, the trading day before the last trading day of last week. Remember, we had Good Friday. So again, we'll watch and see how gold recovers, if indeed it does. If the stock market keeps slamming down, one would expect that money would fly into bonds and gold. So we'll keep our eye on things and see how this market continues to change, modify, and just what's happening. We'll keep you posted on the latest trends as they develop. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.